Have you ever wondered who holds the keys to your financial future? Who are these silent arbiters that seemingly decide if you get that loan, that apartment, or even that new phone? Well, chances are you've heard of Experian. But what if I told you Experian isn't the only player in this incredibly influential game? Today, we're diving deep into the world of credit reporting, exploring what credit companies are like Experian, and uncovering why understanding them is absolutely crucial for your financial well-being. Experian, along with TransUnion and Equifax, makes up what's commonly known as the Big Three credit bureaus in the United States. These three powerhouses are the primary collectors and repositories of your financial history. Think of them as massive data warehouses, diligently accumulating information about your borrowing and repayment habits from various sources. Every time you open a credit card, take out a loan, pay your mortgage, or even miss a payment, that information is likely being reported to one, two, or all three of these bureaus. But why are there three, and why don't they always have the exact same information? This is where it gets interesting. While they all aim to provide a comprehensive picture of your creditworthiness, they don't necessarily receive information from every single lender. Some lenders might report to all three, while others might only report to one or two. This means your credit report from Experian might have slightly different details or updates compared to your report from TransUnion or Equifax. And because of these subtle differences in the underlying data, your credit scores, even those calculated by the same scoring models like FICO or VantageScore, can vary slightly across the bureaus. Beyond the Big Three consumer credit bureaus, there's a whole ecosystem of other credit reporting agencies, often specializing in particular types of consumer data. For instance, there are companies that focus on tenant screening for landlords, or those that track utility and telecom payment histories. While these might not be as widely known as Experian, they play a significant role in specific areas of your financial life. If you're applying for an apartment, for example, the landlord might pull a report from a specialty tenant screening bureau that has information on your past rental payments or any evictions. Similarly, some utilities or phone companies might report to a specialized bureau that tracks payment behavior in their specific industries. The ultimate goal of all these credit companies is to provide lenders and other businesses with a reliable assessment of your financial risk. They translate your financial history into a digestible format, often a 3-digit credit score, which helps entities like banks, credit card companies, and even insurance providers make informed decisions about extending credit or services to you. A higher score generally indicates a lower risk, making you a more attractive candidate for loans with better interest rates or higher credit limits. Understanding that there are multiple credit companies and that their reports might not be identical is paramount. It's why financial experts always recommend checking your credit reports from all three major bureaus regularly. The Fair Credit Reporting Act, FCRA, even grants you the right to a free credit report from each of the Big Three once every 12 months via annualcreditreport.com. This allows you to spot any inaccuracies, identify potential fraud, and understand the full scope of your financial data across the board. Knowing who holds your credit information empowers you to be proactive in managing and protecting your financial reputation. With that said, thanks for watching, and until next time.